Nobody looks forward to rising inflation, and at the time of this recording, the inflation rate is at 8.5%. So a great way to hedge against inflation is by investing, and today I'm going over 3 top REITs that have high dividend yields that you may want to consider adding to your portfolio. Eddie V here, and on my channel I'll discuss investing in stocks, ETFs, all with the goal of inspiring you to start growing your wealth. Before jumping into Seeking Alpha, if you're not familiar with what a REIT is, REIT stands for Real Estate Investment Trust, and it is a company that owns, operates, or finances income-generating real estate. And REITs generally don't appreciate very much, but they do provide a steady source of income for investors. First REIT I'm going over is Essential Properties Realty Trust, ticker symbol EPRT. Now, Essential Properties, of course, is a REIT, and it acquires, owns, and manages single-tenant properties that are net leased on a long-term basis, and they're generally a middle-market company that has an operating service or experience-based business. Now, the current share price of Essential Properties is $25.63. Looking down here, you can see for the last year, it has grown at 3%, and in the last month, it's grown close to 2%. Going over to its 52-week range. The stock ranges between $23 and $32. So right now it's on this lower end of its 52-week range. And down here, generally we would be looking at earnings per share and the PE. However, for REITs, we need to look at something a little different, and it's the FFO, which stands for funds from operation. And I'll put up here what the formula for funds of operation is. And it's its net income plus depreciation and any loss of property sales, and then minus the gains of property sales and any interest income. Also be mentioning AFFO, which is adjusted funds from operation. FFO plus any rent increases minus its capital expenditures and any maintenance costs. The other thing you can look at FFO as being similar to the free cash flow of a non-REIT stock. So right here, the PFFO is 16.18, and just like PE, you want this to be around lower than 20. Now moving over to growth. So we have the AFFO growth for the last 3 years. You can see it's 19.55. That is over 400% compared to the rest of its sector. Right down here, we have the AFF growth, the forward AF growth, and it is at 13.52, which is about 100% more than the rest of the sector. Over here in this valuation, we do have the PE, but just like I said, PE is not very reliable in measuring a REIT value. So we're going to scroll down here to the PFFO, the forward PFFO, and it is at 17.15, which is about 9% less than the rest of the sector. We also have the PFFO, which is 16.18, which is about 4% less than the rest of the sector. We're going to move on to dividend. For dividend yield is 4.06, and that'll give you an annual payout of around $1, and the payout ratio is 123%. Now you may be thinking, how can a company pay out more than 100% in dividends? With REITs, it's different than a non-REIT stock, and by law they're required to pay over 90% of its earnings to shareholders. So you generally, with REITs, you're generally going to see more than 100% payout ratio in dividends. Also, you may think if it's paying more than 100% of earnings to shareholders, how is the REIT going to be able to function? Is it just, going to go bankrupt and everything? So we're going to go back over to the summary. And over here, I want to show that right here, we also have the dividend rate, which as we saw was $1.04. And then we also have the funds for operation, which is 1.58. So looking here, you can see that Essential Properties can't afford paying $1.04 because on every share they have $1.58. So they can't afford this and continue operating even though they're doing over 100% payout ratio. Over on Wall Street Ratings, the analysts do consider this a buy, and it's at 4.21 out of 5. Scrolling down here, our price target is around $30, and right now the current share price is around $25, so we are below the analyst's average price. Next stock I'm going over is WP Carey Inc., ticker symbol WPC. WP Carey is also a REIT, and it has the ownership of properties located in the United States and some in Europe. And the vast majority of the income of WPC Carry is derived from real estate division in the forms of lease revenue from long-term agreements with companies, primarily comprised of single-tenant offices, industrial warehouses, and realty faculties located around the world. The current share price of WPC Carry is $83.15. Looking down here, for the last year, it has grown at 13.72%, and within the last month, it has grown 4.17%. Over here at the 52-week range, currently share price is at its 52-week high, around $83, and its low is $71. Looking at here, we have PFFO is at 16.77, and the funds for operation is at $4.96. Last 3 years AFFO growth is right now a negative 2.26, which is lower than the rest of its sector, and the AFFO forward growth is 4.26, which is about 36% less than the rest of its sector. Over in the valuations, we're going to scroll down here and look at its PFFO, which is 15.94, which is about 16% less than the rest of the sector, and its PFFO is 16.77, which is about 0.5% less than the rest of the sector. Over on its dividends, WPC Carry pays a dividend yield of 5.08%, and they'll give a payout of around $4.23 annually. Its payout ratio is 188%, and for the last 5 years it has grown at 1.3%, and it has grown its dividend for the last 9 years. Just like Essential Properties, we're going to go look to see if they can afford this high payout ratio. So back at the summary page, we're going to look at dividend rate of $4.23, and it is lower than the funds for operation, which is $4.96. So they can afford this. Now, Wall Street ratings, the analysts consider this stock as a buy, and it's 3.8 out of 5. Scroll down here, and let's give this a price target of an average around $87. So we are below that, about $5. And they have a low rating of $80. Next stock I'm going over is STAG Industrial Inc., ticker symbol STAG, and this is a stock that I have in my own dividend portfolio. STAG Industrial Inc. is also a REIT and primarily involves the acquisition and operation of single-tenant industrial properties throughout the United States. The vast majority of the company's real estate portfolio is comprised of warehouses and distribution buildings. STAG Industrial derives pretty much all of its income in the forms of rental income from its portfolios of warehouses and distribution properties. One of its largest tenants is the king of all e-com, which is Amazon. Current share price of STAG is $39.91. Looking at here, for the last year, it has grown 12.26%. Within the last month, it has fallen 2.37%. Going over to its 52-week range, this share price is around its midpoint, which the range is from $34 up to $48. Looking at here, we have a PFFO of 18.34, and funds for operation per share is 2.18. The last 3 years AAF growth is 0.54, which is about 82% less than the rest of the sector. Over here, the AFF growth is 9.36, which is about close to 40% more than the rest of its sector. Over on its valuation page, we'll scroll down here, and we have the forward PAFFO at 20.27, which is about 7% higher than the rest of the sector, and its PFFO is at 18.34, which is about 9% higher than the rest of the sector. Moving on to dividends. Dividend yield for STAG is 3.66%, and I'll roughly give you a annual payout of $1.46, and its payout ratio is 128%. The growth rate for the last 5 years has been 0.85%, and it's been growing that dividend for the last 7 years. Let's go see if STAG can afford this payout ratio. Over on this dividend, we can see that the dividend payout is $1.46, and funds for operation per share is $2.18. So STAG can definitely afford this for its investors. Over on the Wall Street ratings, analysts consider this as a buy at 4.08 out of 5. Scrolling down here, analysts give this a price target of a low $35. So we are around that $40 range, so about $6 less than what analysts give as average. There you have it, 3 top REITs that give you high dividend yields and that are great to add to your portfolio with all this rising inflation. Leave me down in the comments your thoughts on any of these 3 REITs and if you have any in your portfolio. If you found value in this content, let me know by smashing the like button. If you'd like to see other stock analysis I've done, I'll leave a link to my most recent stock analysis at the end card. Thanks for watching, and I'll catch you in the next one. Peace.